Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for July 27th, 2022. Snagit crashed on me, and then Zoom crashed. I had to reboot. Sorry, I'm late. For those of you with a screenshot, that's the backstory behind True Storytelling. Some folks had asked me about its origin story, so I'll let you take a screenshot of that. Excuse me. Okay, so Fed day today, the expected 0.275 or 0.75 interest rate decision. So that gives us the COTA 2 is still intact. And we have this little pattern here. This was a very strong signal upwards today. The short-term momentum is up. Had a relatively large daily range compared to the 5-day range, which is small compared to the 10-day range. The 10-day range is most of the 30-day range, so this is a range expansion to the upside. And today we cleared that gap, which we said it had to get through. That gap was going to act as like a resistance, and now the game is afoot. That's a positive sign. Oh, when it crashed, it got rid of all my markups. Darn it. All right. Well, we'll just do it. We'll do it live. All right. So the S&P. Let's do it this way. Still helpful. All right. So the S&P was up 2.6. The Qs were the best, up 4%. The Russell was up 2.25. Emerging markets up 1.8. Diamonds up 1.4, or half the S&P. And treasuries were in the red by 0.5%. And there's the boundary. Oops. There's the boundary between pluses and minuses. Let's take a look at the underperformers first. So you had biotech and blended commodities and energy all around 2.25. Finance and commercial real estate at 1.5. So it's just about half of what the market returned. Wheat and precious materials, Mexico, Aussie dollar between 1 and 1.3. The Russell food and staples up about 0.75%. DBA is still testing that $20 limit right there. The VIX not as down as you might expect on a day where the market was massively good. So that's sort of a half-hearted vote about the upside. So the market still recognizes it's in bear normal. Marijuana down 2.89. So Rivian off 1%. Alcoa and Cliff only up 1.6 and 1.9 respectively. So, that's S&P index buying right there. When it outperforms the Russell and emerging markets and the Dow, that means there's people buying the S&P directly just to get exposure. That's how I interpret that. All right, to the upside, things that were working today. Lithium, the two lumbers, Brazil oil staples, or discretionary ARC genomics oil exploration, up almost 4%. Clean energy and tech, 4.5%. The FANGs, that's a big move in the mega large caps, 5.5%. ARC innovation, blended large cap crypto, Bitcoin's global future of finance, between 6.5% and 9.5%. Ethereum up 19%. Individual targets, all of the financial disruptors did well here. So you get PayPal, Coinbase, Squarespace between 9.5% and 12%. You get blockchain and Robinhood 5.5% to 6.25%. So that's pretty. That's the disruptors. That's a rocket sled. This is really helpful here. Microsoft and Tesla, very strong vote for the tech bellwethers, along with Apple at 3.5. So when those three are all up large, that's double plus good. Tesla gets all the way back up to 825 again, and again up 6.5 and 6% respectively. Devon Energy, a pretty good day at 5%. U.S. Steel at 4 and an eighth. So this is all the growth stories plus the metals. And energy actually had a good day too. So lots of true believers were buying those things today, and I think the anticipation will be for them to be up again tomorrow, making hay during the bear. We'll see how savage the bear is, or if he's getting tired, because this would be a perfect dead cat bounce for him. The one day of enthusiasm, then getting smashed one more time. So we'll be mindful. Sniper trade of the day today, CME. So this one trades really smoothly intraday. For it, that was a relatively big gap. It gave me the OR5. Now this one is always interesting on it's a financial services, so it's always interesting on Fed Day. There's the OR3 when it broke down. So big gap down. Breaks down below the OR3 standard risk box of 75 cents. That one paid off right away. 1, 2, 3 exit. The rollover. This is a COTA 2 entry short. Micro win. This is the COTA 2 and collapsing dragon. Paid off. That felt like an exhaustion move, so gave it a venture. I think I should have, in retrospect, I'd have gotten out there, but got timed out. And then we were starting to approach Fed time, so I was expecting wild volatility. Didn't really see it in there, but this was a nice way to start the day. So CME is becoming one of my favored targets. The intraday moves of it are pretty nice. All right, dashboard number 1. Bearish normal. The that little COTA 2 move and continuation trade has made the health check pretty nice here on a 2, 10, and 30-day look back. The longer term is still mired in the bear, but this is That's a healthy move up. We still have room for this to go higher. It's still giving us a green light for risk on. This is the warning for the dead cat bounce once more. That was good the last time it told us that. Looking at the conservative symbols that are in the max or in the min pane, Walgreens, Procter & Gamble, McDonald's, the Dow, only ExxonMobil would you consider that to be a cyclic, but those four are all kind of stable and mature companies, staples kinds of moves. Walmart's still suffering from its earnings warning. Verizon, IBM, American Express cannot get out of the hole, and 3M on the max pains. Oops. Dow Tactical. It was a relatively large range today, so no dojis. Warnings of those dead cat bounces here in Caterpillar, 3M, Tesla. I'm not as worried about Tesla to the upside as I am, say, 3M or Caterpillar. I like seeing Apple, Microsoft, Tesla, and Walmart all on the big plus side today. Walmart had a nice recovery after its bad earnings report. That looks like it's starting to look like a value play now. And you can see by its location on the indexes that it's really in the middle of the pack, has plenty of room to breathe and go. Whereas Apple had the breakouts today on the 10-day and 30-day, and Microsoft on the 10-day, so that's all good. IBM and Merck are the only ones on the auto framer. IBM just can't get out of its own way. I think I'd be much more content to play the other techs, to be honest. ETF Tactical, no dojis, tons of dead cat bounce warnings, nothing on the auto framer because of the size of the range today. And now we're starting to see healing action in a lot of the indexes. Big move in metals and mining. They're at 119 on the 10-day. And in Asia, less Japan. So we're starting to see the internationals play catch up because you got emerging markets, Euro-Asia blend, and Asia less Japan all starting to do better. Still lagging the U.S., but starting to improve. Big winners: Brazil, clean energy and tech, and oil exploration. And these are generally the defensive plays: staples, utilities, and healthcare, and treasuries. So this was a rotation into growth and speculation today. That's a sign of optimism, I should say. In the auto framer, because of the size of the range today, only a handful on the auto framer, and we're close to that 10-day high. So these are all the ones that had been suffering: AT&T, IBM, Merck, and Walmart. Walmart's the most interesting one to me because it was a % winner today in the Dow, and yet still has 2.4 to go. So what that looks like is a big sell-off from the 10-day high, a nice reversal on a large range up, but still 2.4 to 1 to get back to the 10-day high. So Walmart to me is a real opportunity. No squeezes today except utilities because of the relatively large range and the strong finish today. Looking at the sniper targets from sniper headquarters here. Garmin remains in Godzilla territory with that large 5-day range. Yesterday was a very large Z1. Today was an orderly move, and I'm going to show you how I traded that one. That was a good trade today. No Godzillas in the tactical symbol set. handful of fireworks. Most of them are quiet on the 5-day in the red. The ones that are interesting to me then would be a very quiet 5-day and a large 1-day. So ENPH and LW, very interesting. So there what you have is you have a fireworks that ended up with a relatively quiet 5-day, 4 of those 5 days, and then a large 1-day move. That's the start of that breakout. And that's what, so you would expect that to have some more, because everybody that loved it on the way up saw this as now sees that as a consolidation, and they think it's starting that move. So LW and ENPH are attractive for that reason. TMUS is not far behind. It's very close to being noisy on the 5 and the 1-day. Not quite, but it's pretty close. Lots of fence sitters. The ones that started their moves today, again, you can see that highlighted here under the Z1. Conagra in the food, and HES, who I don't know who that is. But very quiet 5 days in general, and the beginning of range expansion to the upside on both of those. So that's very healthy. Most of the quiet ones on the 5-day stayed quiet on the 1-day, with a couple notable exceptions. But even those are not large moves. Sleepy. So you almost wonder, why were they not bigger today? That's what I would think. The ones I'm really interested in are the ones that are already volatile on the 5-day and had a large 1-day. So I'd be interested in these. BSX. Really interested in this one with that large 4 sigma move today. Juniper Networks. That's what you want to see right there. Walmart. That's what we love right there. Walmart. Archer Daniels Midland in the food. Teradyne in tech, and whoever these guys are well with a 4.53. So those are the ones that really stand out to me. The ones that are already moving and had a big follow-through day today, those are in play. So that's how you can use that to quickly go find and adapt to changing market circumstances. Who benefited the most from today? That's how you look at that. Inside the tactical symbol set, sorted by Z5, descending. Coinbase is at a large 5-day and a almost large 1-day. The Bitcoin, or the blended crypto. Microsoft, I take that as a very strong sign. You've got pushing the top of the envelope on the 30-day and the 10-day, but the longer term, it has plenty of room to go. It's only at the 27-yard line. And it was kind of a normal 5-day, 0.21 in the white there, but a large 1-day move. So Microsoft is a winner for follow-through for tomorrow. The cryptos, I am less persuaded by large 1-day moves on those, except just to say they're always going to be potentially vigorous, if I can say it that way. PayPal, the disruptor. There's one that was just coming out of wickedly oversold long term, but is like a fireworks on the short term. Very quiet 5-day and a large 1-day. So PayPal, to me, deserves attention. Materials being pulled upwards by the metals and mining. Excuse me. The health check starting to look a lot healthier now as the market is gaining some traction to the upside. Lots of summer. And even the springs are leaving the Red River. That's what we see by that. You know, they are moving quickly towards summer. When you see spring but in the green on the Z-score, that's a very favorable sign. No surprise here. Lots of big breakouts. The ones you want to pay the most attention to are the ones that have the longest and earliest green. So like Apple is good because it had a breakout on the 30-day high, as did PayPal. Those are very persuasive. I mean, there's a lot of things that had good 2 and 10-day and good 2 days. But the fact that these are already above their 30-day high is an indication that they are leading the way, relatively speaking. So when we look at the ETFs now on this, we can now get a sense of market conditions and where the growth sectors are. So that's going to be these here in this block. So the Russell, Tech, the S&P, large caps, mid caps, and real estate. So all U.S. all the time in the growth indexes. But even EFA is starting to pick up the scent. The Euro-Asia. Emerging markets not quite as strong. Latin America, metals and mining, not quite as strong. But Asia, less Japan, strong. So you're seeing a broad base of strength. And now that we've taken out the 30-day high in a series of little upward kata twos, this looks very promising, tentatively. Going to still remember that we are in bear normal. My brother correctly points out, notice now if we look at the 90-day, there's some strength for you there. McDonald's really leading the way. So you like to see that. So let's put another star. Good catch. +1 to my brother. So this is a way to do a rapid world market model assessment of relative strength. And you can see the changing ebbs and flows of strength and weakness. The ones that have been smashed the most, right? Silver, blockchain, Mexico, gold. Bitcoin over here. Bitcoin just barely, GBTC. Yeah, Bitcoin barely getting out of the basement right now. Weakness here in Squarespace. So yeah. I like that. I think PayPal really has a chance to recover. Like they're maybe not going to go bankrupt. Who knows? And they are still 92% higher to go. You know, that 8 on the long term just tells you how far the mighty have fallen. Same with blockchain over here. The blockchain ETF just barely beginning to recover. So still early days on the next leg up in crypto. This was the opportunity to fail, and it didn't. It voted to the upside and took out that previous high and got above 400 briefly. But right there knocking on the door. That's going to be an important psychological level too. The slope of the 30 is still right at the edge of normal at +1. The last time it had a nice bounce, so there's still that little bit of a room to go. And during the really strong run up, 180 days ago, it had gotten this high. So cautiously optimistic for more. See, it has fought its way across the river and broken out. Little Loch Ness monster looking thing. Little Godzilla peeking his head out. It couldn't get there last time. This time it actually peaked and had a nice run before the big fail. So what's it going to do? We really want to see it stay above 390. Come on, boys. Mush you Huskies. The next test right around 410. So that's about another 2.5% of momentum before it gets really tested. And then what was once support then became resistance. So now we're going to come up and see if it can get through the all-important 410. Can it get up here? Let's see. All right. Let's do some quick look at some sniper trading today. I think I already showed you, already showed you CME, so I'm not going to revisit that one. The usual. Devon Energy. This was here was the yesterday's close. Nice big gap up. It sold off and then started moving back up. I bought it with the wrist box off the low. It rolled over and stuck around too long. Took a minus 0.5. Thought hard about the short, but oil was so strong here, and the individual companies, the large caps were doing well. Couldn't pull the trigger. I took the COTA 2. PSAR flip, standard risk. Get paid early. That's the no lose plus dinner for 2. I'd already been committed, but that would be a natural place to add a second one because you're already one in hand. You've cleared the congestion. That's a reasonable second entry. Started stalling in the usual way. So that's 1, maybe 1.5. COTA 2, quick fail. COTA 2, quick fail. And I think that was enough for me. Now we're getting into Fed time, and I was looking more at the larger caps, to be honest, to be moved by the Fed, and didn't get that move there. So 3 losses of about 0.5 on each one, 1 gain of about 2, so slightly net positive on Devon, but more of a grind. So this was Garmin. It's a Godzilla. yesterday it had in the last 2 days, they had a big sell-off, orderly slides during the day, and it opened today with an 8% gap down, and then started to recover right away. So 2 huge days of sell-off that ended here, and then a big gap down to the low of the day, and then started to move up, and it moved a risk box off the bottom and kept going up. So I just held my nose and bought it. It ran up and then started to sell, and when it moved one risk box off the top, I just cashed it for about an R, and was just happy to get out of that one alive. Sort of an opportunity trade, easier to see on 1 minute. I let it sort itself out. Now we're about 90 minutes into the day, kind of consolidated in this, and then broke down. So tried it short, standard risk box, quick loss, re-entered short, maybe +1, and there just wasn't much. There wasn't much more follow through, and then we were approaching Fed, and so this was just stabilizing. So there was a couple opportunity trades, but not much to speak of. My sense was the only people still holding Garmin are the ones that could not be shaken out by the last 3 days. And there's not a lot of people interested in speculatively buying it, so that it may be dead money for a while. This is Coinbase. It took me a while to pull the trigger on this one. I saw this consolidation, thought hard about this one on a breakout to the new high. Didn't have the will, but when I saw this pattern, bought it with the risk box. No lose plus dinner for 2. Started failing sharply. Short, scratch. Caught a 2. Scratch. It finally gave me a caught a 2 after the, this was after the Fed. So there wasn't as much Fed-induced volatility, and I liked that it had given me a caught a 2, so I speculated on that one with a tight risk, and it paid off, and I was just happy to get that one. Missed the second caught a 2. Tesla. So this one started off with the close was way down there yesterday. This was a big gap up, rolled over. There's the OR3. When it falls through here, I short it. Starts reversing right away. So I'm like, that's about -1. It reverses again. I'm slow to get back in. Kind of waited to see this break. So long, standard risk. Standard exit. Caught a 2. Half an hour loss. Caught a 2. Half an hour gain, so those two kind of negate. Going into the Fed, tried one. Quick loss. Then the Fed happens. And then about 1 hour on the afternoon excursion. So that's a really strong move and a strong finish in Tesla. So that's going to be high price for tomorrow. U.S. Steel. This one closed here, gapped up, started to fail. Thought about shorting on the PSAR break, missed that. Didn't have the will, and I was already short CME, so I didn't want to overload my little brain. If I get short there, then I should be covering somewhere around in here to take that trade, and I should be thinking about this one, but I wasn't strongly connected to this one, didn't have a feel for it. Missed the caught a 2. That felt really dumb now. Didn't want to chase because we were so close to this resistance level. And this feels like it's coming into a decision point somewhere around in here. Thought about that as a caught a 2, couldn't take it. Finally, I just had to take it because I was disgusted. So you had caught a 2, caught a 2, caught a 2, caught a 2. Finally took it. And scratch, good. Teach me a lesson. Now we're into the Fed. This was the post-Fed volatility. There wasn't as much as I thought, and then when it broke, in a major market participant for me, U.S. Steel, I felt good about that one. Standard risk was here. Fractional payoff, and then I was just out of sorts, and it was getting late in the day. Didn't have the will. So this was not especially good on U.S. Steel. I couldn't get my steps together on this one. It just every time I looked at it, I felt like it was in between. So just didn't have the will. So it didn't really properly align. There was no follow through, and I was just happy to get a piece. Next up, last one is international paper. So I really like the way that thing has been trading intraday. So that was, I'm like auditioning it for a new favorite. Let's see, where's the open? Okay, there's the open. I was short CME on this one and messing around with Tesla, so I had the span of control issues in here. On another day, I might have tried that one long and then probably scratch this. But with a new one, I am not that eager to get into it right off the bat. I want to see it shape out first. I felt a strong urge for a caught at 2 in here. Span of control issue. And again, I didn't want to chase being that close. I didn't want to chase in here because I'm so close to the resistance level. Finally, a clear caught a 2. Now we're about almost 2 hours into the day. So I felt like this and this. Standard risk. Slowly got some traction. Now, I noticed I'm seeing a lot of guys trading in the river, taking tons of 0.2 and 0.3 losses, and just taking every possible blip. Here's just another way to look at it. Try this on if you're feeling that way and frustrated. Notice that just a trailing 1R. Until you get a clear signal. And that may be a way to avoid getting chopped around. If you find yourself getting chopped around in that kind of structure, and you're doing a lot of stop and reverses and getting chewed up by crocodiles, that 1 hour trailing stop is a way to slow your roll, especially on an industrial company like IP, which is not a sexy, uh, growth stock. Now we're getting towards the Fed. I missed the breakout to the upside. Missed the COTA 2. And just kind of gave up on it. Again, so this is like not one of my standard traders yet. I'm still auditioning it. But what I do like is the orderly move on that one. My brother said take a look at IP on a 10-minute chart. So let me pull it real quick. Let's see what he's talking about in here. Yeah, that's a 10-minute chart for you right there. Yeah, hard to argue with that, PSAR, huh? Probably a some kind of COTA 2 right around in here with a wrist box like that. PSAR protects you up into the Fed, and then the breakout, maybe you can get this. Yeah, and his R10 is 13 cents. I was using 20 cents on mine, but a 13-cent trailing stop in here protects you that whole way. So there's some power in the R10. Let's see. Well, that one crashed too. Stand by. Let's get the... Oh no, I already looked at the reports, didn't I? Sorry, looking at the wrong chart. Yeah, I didn't do very well on Devon either today. So, Paul, take a look at mine on Devon as well. I don't disagree. I see the like the little 1, 2, 3 inside here. It's like you're taking the almost an SSC inside here. It rolls over pretty fast. That's a pretty good exit. If this is supposed to fail back down into here right away, when it doesn't, I think you stayed too long on that one, on the rollover. This is supposed to go, and this is supposed to go, and we stuck around for 3/4 of a loss. But then when you get the gain, you're also letting it come all the way back. So this was almost a 1 hour win, which we gave back 3/4 on. That's a great reentry. Good, getting paid well. On this one, when on such a strong up day and energy was good and oil was good, I don't know that I'm in such a hurry to short this, to be honest. Like, seeing that, I might just commit. And maybe I want to see a COTA 2 break before I just instantly stop and reverse everything. I'm not trying to make every trade I possibly can. I'm trying to be pulled into trades against my better judgment, almost, if I can say it that way. Um, this is nice work here in Tesla. That same mentality got you, into that. I didn't get that until it had broken out after I lost one in here. That's really good exit. And again, on a day where you have that much of a gap and that kind of move in Tesla, I don't know that I'm really eager to get short that thing. Twice. And then that's the one I want. Still 1.5. Luke with the Aussie dollar. I think. Nice tight consolidation box. Z2 breakdown, Z3 breakdown, dragon horns, nice recovery. Now notice the RL10 barely flinches, and when that happens, that's a great exit. Good shot, good scratch, good re-entry, got paid. Good shot, good scratch, 3.3. Nice work. Arch. Yeah, the difference in the day was that's where Luke got in. So you're away from the desk here. So you start trading here. So that's a quick scratch. Is that a short? No, that's not. That's sorry. Looking for the entry. This should be. Yeah. Okay. Plus 0.4. Okay. So that's a good shot. I don't disagree with that short. That's fine. It rolled over. This is like a Kata 2 short. That's what we want. And then this is a great exit. You could even reverse from there, but I like the patience. We shouldn't let that go negative. Why is that? I don't see where the losses are that are making that. We're kind of getting chopped in the river here. Okay, I see that. Oh, okay, over here. I didn't see these over here. Sorry. Kata 2. That should be a scratch instead of a loss. That's a better disciplined exit there. Crocodile River. That's 8 trades of constant grinding. And then after the FOMC, we missed that, but we did get that. So I think too much grinding, and you got to sit on your hands and then be ready for the break. Especially after that little 1 2 3 1 2 3. Man, we should be killing that. Take a look at the other Tesla sample trades. We should be on that one sooner, and re-enter. We should be getting more out of that trade there. Devon Energy. This was hard, but that's where your re-entry to the upside is. I don't disagree with that short, but if you're out here, That should be you're breaking above the emerging dragon, and energy was strong. We should be crushing that. All right. So for Tim, Tim, I'm not persuaded that the instrument you're trading is moving enough when you're trading the S&P in its off hours, so you're getting very low volume and very little follow through. I think you're trading in the noise. I think you need a symbol that is open and active with the primary traders trading it at your time, so that you can get the statistical advantage of large numbers. And the 5 minute I find very hard to trade. I find it easier to trade 3 minutes than 5 minutes. And that would be my advice on there. I would also say I'm going to send you the invite to do the bar by bar trading, and I want you to pay more attention to the structured reward to risk discussions we're having on each one of them. I feel like you're in a hurry to trade these things, and you're not doing the calculations and the analysis. I think you're expecting to not work, and your frustration is causing you to take shortcuts, and you're feeding the depressive state of mind on that. So we just stop that right now, and I want you to concentrate on the bar by bar, and then go back and look at your first 300 trades, at the things that were working, and get back to first principles. That's going to be my advice to you right there. My brother said take a look at Google. So we will, and and we talked about that one yesterday. I didn't even trade it today. I still have a psychological block on those guys. Let's take a look at the daily. Yeah, there was on the threes. This is pretty compelling. This is a mover that I should have found earlier. Yeah, that's pretty orderly. I mean, that's a 3% move in there from the turning point. Yeah. And then the move after the Fed was a nice one too. I couldn't, even if I'd have been more alert, I wouldn't have played it because it's not one of my primaries. All right, that's everything we got for today. Good work today, guys. We'll see you tomorrow.